Welcome to Long Investor. So today we're going to go over the question of is it time to buy Chinese stocks? And as I have emphasized many times in my past videos, we are not just going to take a look at the chart. We are going to take a look at the macro environment and some data to determine whether it is time or it's still not time to buy the Chinese stock yet. In here we see Alibaba is heading down since in October of 2020 and it still hasn't been recovered yet and it still hasn't even break the downtrend yet. As Alibaba is dropping, a lot of YouTubers, a lot of people are saying, oh, look for the moving average, the 200 days, and the Monica band, or even have the pivot points or the anything to say to try to guess the bottom. But I'm going to show you a data that I think we're getting close to the bottom as of this moment, and that is the dollar. The relationship between the dollar and the emerging market is kind of a inverse relationship. So if I put KWEB, it's one of the emerging market ETF, you can see that when the dollar rises, the emerging market doesn't really do much, but whenever the dollar drops, the emerging market will perform quite well. You can see, for example, in 2018, when the dollar is going up, the emerging market is going down, and vice versa. You can see in March 2020, the dollar is going down, emerging market is going up, and then we get an inverse of the trend in here again. So even without the delisting news, the CCP crackdown on the tech stock, even without those, the emerging market would not be performing well against the rising of dollar. And BABA moves similarly to the KWEB because KWEB is a Chinese ETF, and BABA being one of the biggest company, everybody kind of follow the BABA movement. And for the dollar strength, every time when something bad happens, people would tend to buy the dollar as a safe haven. So for example, back here we have a little breakout, so that's when COVID happens, so the dollar rises, and here the dollar was consolidating throughout from November until February. I wasn't sure if we would see a retest of the resistance of the downtrend line, but as you have known, the Russia-Ukraine conflict happened on February 24th, and that spread up the dollar. So once again, we see the testing of resistance of the dollar, and we see the emerging market dropping. But if you zoom in right now, you can see a kind of tiny double top on the dollar with a losing of momentum. So we might see the dollar fall back in the next couple of weeks, which will benefit the emerging market. So is there a possibility that we might see a break trend of the dollar just like what happened in COVID? Absolutely. And I think it all depending on the current Russia-Ukraine issue, whether the conflict will continue and such, that we might see a spike on dollar really depending on the conflict. And in my stock pick video for 2022 back in January, I did mention that the emerging market, the Chinese stock, since it has been dropping quite a lot last year, that it might have a better return this year than the US stocks. But don't get me wrong, it doesn't mean that the US stock will continue to drop from now on. It just means that if, let's say, KWEB, it is the bottom right now, and even if it's going to like half of the from all-time high, it'll be a 150% increase. Whereas S&P, let's say if it rebounds, even when it reaches the all-time high, it's only going to be 15% versus 150%. And in these two videos, I explain why I think there will be another bull run for the US market before a recession. And my point of view still stand firm from what I think back then. So if you haven't watched it, you can check these two videos out. And also the dollar is not going to be dropping straight down where the emerging market will go straight up. The dollar might consolidate within the resistance line, which might not benefit the emerging market to go, and it will go lower. But things at this point is all about the risk reward ratio, and the risk reward ratio I think is pretty close to beneficial to get emerging market. As I mentioned, I still believe there will be another one for the US market. If you're really not sure about the emerging market, you can put like pocket change in it. Don't go all in here. But if that pocket change plays out, then you are looking at a tremendous return. And even if the dollar starts to drop, there are some risks at the moment that you have to watch over for Chinese market. And one of them is the Omicron COVID, which seems to be breaking out quite badly in China. You have Shenzhen locking down for 7 days, and then you have Hong Kong having an outbreak also. So we need to see how well the government can control the cases after 7 days. So that's one of the risks. And the other one is that the US say Russia will ask China for military aid or military equipment. If China decided to supply military equipment to Russia, I think they will probably get sanctioned by the NATO allies. So that's the other risk you have to watch out for. And there's no point of guessing what they will do. It's just something that you have to constantly monitor the news for. If you do decide to get KWEB around this time, I would make a backup plan and just plan ahead of what will you do if something bad happens. So for example, if the dollar managed to break the downtrend, you will need to decide whether you want to cut loss or you might want to average down when you reach the next support, which is around 100 level, so you can see a few toppings at around 100. So if you do average down around here, there might be some kind of pullback, as you can kind of break even by then, but it is just something that you have to decide for yourself. As for the category of trending stocks, you could buy ETFs such as KWEB or CWEB, or if you want something other than just Chinese stocks, you can consider EEM. As for Chinese stocks itself, I would not pick something like Tao Education Group because their business model is not in line with the government vision, which they don't want people to pay for tutor. As I mentioned in the stock pick video, something that in line with the vision would be green energy. So for green energy, you have something like the JKS, although it's about half off from all-time high, but it's better than stocks like Alibaba or PDD and YSG. And some of the EVs are NIO, BYD, NIO, and Xiaopan. Of these few EVs, Kathy would pick Xiaopan, NIO, and BYD. So she didn't pick NIO. I'm not sure why. I guess she doesn't see the battery swap to be a efficient system, I guess. So this is all I wanted to share today, and I'll see you guys next time.